So yesterday we have completed with all the sections of TDS. Now we need to move on to other sections. But before we move on to other sections, let me remind you that when we started this chapter and when we started this chapter, I told you that this is divided in three parts: TDS, TCS, and advanced facts. TDS, TCS, and advanced facts. So even though income of previous year is chargeable to tax in the assessment year, even though income of previous year is chargeable to tax in the assessment year, tax collection actually happens in the previous year itself by three different mechanisms: TDS, TCS, and advanced facts. So we started with TDS, and in section relating to TDS, before we actually started TDS, I told you that there are two parties here: payer and payee. Payer is a person who will make the payment, and payee is the person who will receive the payment. Payer has been assigned 4 duties in this chapter. Number 1, he has to deduct the tax. So till now, whatever discussion we had, that was in respect of only deducting tax. That was only in respect of deducting tax. So in which section tax is required to be deducted, in which nature of payment tax is required to be deducted, at what rate, when to deduct TDS, what is the minimum amount not liable to TDS. All these things were discussion, which was part of the first point: deduct the tax. Second, the duty of the payer is to pay the tax. Whatever tax he has deducted, he has to pay to the credit of central government. Number 3, he has to file the TDS return, and number 4, he has to issue the TDS certificate to the payee. These 4 duties we had discussed. Out of these 4, the first one is completed. It is discussed in details. Now remaining 3 are pending: pay the tax to the government, file the TDS return, issue the TDS certificate. Besides that, there are two duties of payer. Besides that, there are 2 duties of payee. There are 2 duties of payee, person who is receiving money. There are 2 duties of payee. Number 1, even though he has received the net amount, he should consider gross amount in his income. Even though he has received the net amount, he should consider only gross amount in his income. That is what we have already discussed in salary chapter also. What is taxable is gross basic salary and not the net basic salary. Same thing we also discussed in the chapter of income from other sources, saying that if you have won from horse race 70,000 rupees after TDS, then what is taxable in your income is gross amount. You have to do the reverse calculation and ascertain the gross amount. So first duty of the payer is to add the gross amount to the income. And number 2, from his total tax liability, he will claim the TDS credit. Whatever TDS payer has deducted, that TDS payer has to pay to the government. That TDS payer is not paying his own tax. Payer is paying tax on behalf of payee. So that is payee's tax, not payer's tax. Whatever payee's tax is paid, for that you will claim the TDS credit. So from the total tax liability, that amount of TDS will be deducted, and balance, if any, will be paid to the government. So all these things we need to discuss in detail. See, 2 duties of payee, they are already discussed. There is nothing there to explain in those 2 duties. So now we'll move on to small sections of this chapter. The first one is grossing up principle, section 195A. Grossing up principle. Grossing up principle is applicable when the amount is paid and it was amount is paid to pay, and it is agreed that the tax amount will be paid by the payer. Amount is paid to the pay, and it is agreed that tax amount will be paid by the payer. Or second possibility is amount is paid after deducting TDS. So what amount payee is receiving is a net amount. So you should do the reverse calculation, find out the gross amount, and that gross amount should be added to the income. So when tax is agreed to be paid by payer, grossing up needs to be done to ascertain the tax amount. When under an agreement or any other arrangement, the tax on any income referred to in the foregoing provision of this chapter is borne by the person by whom income is payable. In other words, payer is bearing the tax. Then for tax deduction at source, under this provision, such income shall be increased to such an amount as would, after deduction of tax thereon, at the rates in force for the financial year in which such income is payable, be equal to the net amount payable under an agreement or arrangement. In simple language, say for example, inside commerce studies is paying me 50,000 rupees without deducting TDS. We have agreed that whatever TDS is there, they have to pay money from their own pocket. They have to pay me after TDS amount. So they are paying me say 50,000 rupees. So what amount of tax they should pay to the government? The TDS rate is 10%. In that case, government says whatever amount is paid to the payee is considered to be after TDS only. Is considered to be after TDS only. Means whatever amount is paid to me now, that is 90%. That is 90%. So 50,000 was paid to me. That 50,000 will be considered to be 90%. So 50,000 divided by 90, multiplied by 10. If you do this calculation, you will get how much amount? 55,555, correct? Yes. So they will pay to the government. How much they will pay to the government in the form of TDS? They will pay 5,555 to the government in the form of TDS. They will pay 5,555 to the government in the form of TDS. What will be considered as their expenditure? 55,555. What will be considered as my income? 55,555. Have you understood this? Yes or no? So whenever payer is paying money to pay, and it is agreed that the tax amount will be paid by the payer. It is agreed that the tax amount will be paid by the payer. In that case, the amount paid to pay would be considered as paid after deducting TDS. So reverse calculation is required to be done. The amount paid to the pay is considered to be net amount after TDS. So reverse calculation will be done. Gross amount will be ascertained. Such grossing up is not required to be done. Such grossing up is not required to be done in case of non-monetary in case of tax on non-monetary perquisite paid by the payer. Do you remember we had discussed this while discussing section 192 that employer is providing two types of perquisite to the employee, monetary perquisite and non-monetary perquisite. On that non-monetary perquisite, whatever is the tax amount is paid by the employer. For employer, that tax on non-monetary perquisite is an expenditure, but deduction will not be allowed to him. Deduction will be disallowed to him as per section 40, clause A, subclause 5. And that amount of tax will be exempt in the hands of employee in section 10 clause 10cc. So in this case, you are not required to do any grossing up. In this case, you are not required to do any grossing. Yes, is that very, very clear? Shall we proceed? Yes. Section 195A is over. That talks about grossing up. Next is section 196. This I have already told you twice or thrice as passing reference. 196 says what? When you are making payment to central government, state government, corporation established under Central State Act, Reserve Bank of India, and mutual funds specified under section 1023D. When you are making payment to central government, state government, corporation established under Central Act, State Act, Provincial Act, Reserve Bank of India, or mutual fund established under section 1023D. Mutual fund set up specified under section 1023. In that case, you should not deduct any TDS. So to these people, you have to make payment without deducting TDS. To these people, you have to make payment without deducting TDS. Is that very clear? Next is section 199. Oh, sorry, 197. Now listen to me very carefully. Say for example, Sarvana is appointed as a faculty with Inside Commerce Studies. Sarvana has cleared his CA intermediate. He is preparing for CA final. At the same time, he is being appointed as a faculty for 11th, 12th and CA foundation. And Inside Commerce Studies will be paying 30,000 rupees per month to him. 30,000 per month is paid as a retainership fees. So question is whether TDS is required to be deducted. We are paying him professional fees. Should we deduct TDS? Yes, in section 194J. If the payer is into business and their turnover in the last year was more than 1 crore, or payer is into profession and the gross receipts are more than 50 lakhs, in that case, while paying professional fees to the payee, he should deduct TDS at 10% at the time of payment or trade, which was earlier. Minimum amount not liable to TDS is how much? 30,000 rupees in case of professional fees. COVID special rate is 7.5%. So, throughout the year, how much amount Sarvana is going to receive? He will receive 3,60,000 rupees. 30,000 per month he will be receiving. So, he will be receiving 3,60,000 rupees. Correct? What will be his tax liability? If his income is 3,60,000, what will be his tax liability? Up to 2,50,000 no tax. Above that 5%. But because of rebate under section 87A, his tax liability will be 0. Yes or no? This tax liability will be 0. Still Inside Commerce Studies will deduct TDS because section 194J says that if the aggregate amount of payment made during the financial year is exceeding 30,000, you should deduct TDS. So unnecessarily, Inside Commerce Studies will deduct TDS. Sarvana will have to file the income tax return and claim the refund. Unnecessarily, his money will be blocked with the income tax department for a very long span of time. So government has come out with some facility here. Government has come out with some facility called as no TDS or low TDS certificate. No TDS or low TDS certificate. Payee can submit an application to the assessing officer, income tax officer, in form number 13. Application for no TDS or low TDS certificate should be submitted along with the PAN number. No TDS certificate means my tax liability is 0. Kindly give me the certificate saying that payer should not deduct TDS. If the assessing officer is satisfied, then he will issue the no TDS certificate. In that no TDS certificate, name of payer Inside Commerce Studies will be clearly mentioned, and will be instructed to the Inside Commerce Studies that please stop deducting TDS. So Inside Commerce Studies will stop deducting TDS. So payee can submit the application to the assessing officer, and that application is either for no TDS certificate or low TDS certificate. If assessing officer is satisfied, then he will issue the no TDS certificate or low TDS certificate to the payee. The copy of the certificate payee will submit to the payer and payer will stop deducting TDS. In case it is a no TDS certificate case, then payer will stop deducting TDS at all. On the other hand, if there is some negligible tax liability, say for example, Sarvana completed a chartered accountancy also. Now we are paying him 50,000 rupees per month. If we are paying him 50,000 rupees per month, the early amount is 6 lakhs. Can you tell me what is the tax liability in case of 6 lakhs? 32,500 plus cess will be how much? Yes, yearly 6 lakhs na. So up to 5 lakh tax liability is 12,500. Above that 20%, that is 20,000. So 33,800. Deva madam, it will be 33,800. And while making payment to Sarvana, how much amount will be deducted in the form of TDS? Every month 50,000 will be paid and 5,000 will be deducted in the form of TDS. Correct? Every month, how much will be paid? 50,000 will be paid and 5,000 will be deducted as TDS. Correct? So yearly, how much amount will be deducted in the form of TDS? 60,000 rupees. Yearly 60,000 will be deducted, but his actual tax liability is only 33,800. So more TDS is getting deducted. In that case, instead of no TDS certificate, Sarvana's tax liability is not zero. There is a tax liability, but tax liability is less, but the TDS is deducted at a higher rate. So in that case, we say that Sarvana can apply to the assessing officer for what? He can apply for low TDS certificate. Then assessing officer will calculate at what rate if the TDS is deducted, entire tax liability can be recovered. So what assessing officer will ideally do? 33, he will take out the percentage of that 33,800 amount on an amount of 6 lakhs. So 33,800 into 100 by 6 lakhs. That is what he will do. So that would be around 6%. It is 5.63%. So even if tax is deducted, even if tax is deducted 6%, entire amount of liability can be easily recovered. So in that case, assessing officer will issue a low TDS certificate to the payee. In that certificate, the rate of TDS will be mentioned. Copy of this certificate, payee will submit to the payer, and payer will start deducting TDS at the rate which is given in the section. Have you understood no TDS, low TDS case? Such kind of facility is not available in all sections. Such kind of facility is available only when the payment is made in section 192 salary, 193 interest on security, 194 dividend, 194A interest other than interest on security, 194C TDS on contract, 194D insurance commission, G lottery commission, H other commission on brokerage, 194I TDS on rent, 194J professional fees etc. K payment made by mutual fund, compulsory acquisition, 194 double B, 194 L double B, LBC not part of your syllabus, 194A contractual payment, professional fees. If you are not covered by 194C and 194J, 194O payment made by e-commerce operator. In all these sections, this no TDS, low TDS certificate facility is available. Application will not be accepted if the PAN number is not mentioned in the application. This application will not be accepted if the PAN number is not mentioned in the application. Section 197 is over. Now we move on to section 197A. Section 197A. See, government has come out with a facility of no TDS certificate. Government has come out with a facility of no TDS certificate, low TDS certificate. That is okay. But can you imagine a situation of bank interest? lakhs and lakhs of people might have deposited money in their bank account in the form of fixed deposits. Bank might be deducting TDS in every cases wherever the amount of interest is more than 40,000, 50,000. And a lot of senior citizens, they are retired, they have kept bank FD and they are getting interest. If everyone goes to the income tax department and he applies for no TDS certificate, then the workload of the income tax department will increase to such an extent that normal work will be affected. They will have to assign the officers only to do one job, that is handle the application for no TDS, low TDS certificate. So it will be very difficult and tedious process. A lot of resources will be wasted. Therefore, government came out with some different methodology. Government came out with a different methodology wherein government says that instead of low TDS certificate, no TDS certificate, we are coming up with a new mechanism. Now we will not ask the payee to go and get the no TDS certificate from the income tax department. Instead, payee can just submit one form to the payer. That form is either Form 15G or Form 15H. This is required to be submitted in duplicate. It should be duly signed by the payer, payee, and it should be along with the PAN number. This payee, who is a resident individual, can submit form number 15G, form number 15H to the payer itself. He need not go to the income tax department also. He can just submit the form 15G, form 15H to the payer. What is written in this form? In this form, it is clearly written that my tax liability is 0, so don't deduct my TDS. So in this case, payee is giving an application to payer itself. In fact, it is not an application, it is just a form he has to fill up. In case of a senior citizen, form number 15H is required to be filled up. In case of other payees, form number 15G is required to be filled up. So in case the payee is a senior citizen, form number 15H is applicable. In case the payee is the other person, form number 15G is applicable. The moment payee submits form number 15G or form number 15H to the payer, payer will stop deducting TDS. The moment payee submits form number 15G, form number 15H to the payer will stop deducting TDS. Such kind of facilities available for section 194, dividend 194 EE, payment from NSS, 192A, 193, 194A, 194D, 194D, and 194I. Such kind of facilities available for these sections. So payee can submit the form number 15G or form number 15H to the payer along with the PAN number. The moment payer receives this, he will stop deducting TDS. Is that very, very clear? Yes or no? Okay, let us proceed now. Next point says, listen to me very carefully. Next point says, if the payee submits form number 15G and form number 15H to the payer, then payer should stop deducting TDS. But for example, Sarvana has kept a fixed deposit with bank, and the amount of fixed deposit is say 5 lakh rupees. Amount of fixed deposit is 5 lakh. On that, he is receiving an interest of, amount of fixed deposit is 50 lakhs. Sarvana has kept a FD with bank. Amount of FD is 50 lakhs. I have also kept an FD with bank. Amount of FD is 50 lakhs. Sarvana is a senior citizen. I am a non-senior citizen. We both have kept an FD with bank to the tune of 50 lakhs. And bank is going to pay us interest. How much? 5 lakh rupees. Now Sarvana is submitting form number 15H to the bank. Form number 15H is a declaration that my income is less than the basic exemption limit, my tax liability is 0, so don't deduct TDS. Now the point is, bank itself is paying an interest to Sarvana, and that interest itself is more than 3 lakhs. In case of Sarvana, basic exemption limit is how much? Basic exemption limit is 3 lakhs, and bank is paying interest of 5 lakhs, which is more than 3 lakhs. And Sarvana says that my tax liability is 0. Should bank accept his form number 15H? Government says, yes, let them accept. Let them accept. Because Sarvana is a senior citizen. But in my case, I am a non-senior citizen. I will be submitting form number 15G to the bank. In form number 15G, it is undertaking that my tax liability is 0, so don't deduct TDS. Form number 15G, it is undertaking that my tax liability is 0, don't deduct TDS. But bank itself is paying me 5 lakh rupees as interest. How can I say that my tax liability is 0? My income is less than the basic exemption limit. The government says, in that case, if payee is submitting form number 15G, then bank should not accept form number 15G. Bank should not accept form number 15G. Earlier, this was seen only taken into account the basic exemption limit. Now, this is seen taken into account the rebate under section 87A also. Now, this is seen taken into account rebate under section 87 also. Now, for example, let me change the amount. FD kept cash with the bank is for 1 crore and bank is paying say 8% interest, that is 8 lakhs. Sarvana is submitting form number 15H. Will bank accept form number 15H and stop deducting TDS? Answer is yes. In my case, I am also submitting form number 15. I am submitting form number 15G. Will bank accept my form number 15G and stop deducting TDS? No. Bank will say that your income is beyond the basic exemption limit. Your tax liability is not 0, so we will not accept your form number 15G. But in case of Sarvana, bank will accept. Why? Because he is a senior citizen. He is submitting form number 15H. He is a senior citizen, so bank will accept. And bank will stop deducting TDS. So bank can accept form 15H, but it cannot accept form 15G. Section 197 is subsection 1B. Payer not to accept form 15G if the amount paid payable exceeds the basic exemption limit or such amount of income which is eligible for rebate under section 87A. 197A 1B says payer should not accept form 15G or H if the amount paid exceeds basic exemption limit. CBDT has clarified by notification number 41 of 2019 that payers should not accept form 15G if amount paid payable exceeds basic exemption limit or such amount of income eligible for rebate under section 87. This rebate point was inserted in the notification. Act doesn't mention anything about rebate. Act is mentioning that if the income is less than the basic exemption limit, then payee can submit the form number 15G, 15H to the payer, and payer should stop deducting TDS. This rebate point was inserted only by CBDT notification. Section 197A, subsection 1C says if payee is a senior citizen, then payer can accept form 15H even if the amount paid or payable to the payee exceeds the basic exemption limit. Have you understood this? Next point says payer has now received the copy of form number 15G and form number 15H. Payee has submitted form number 15G and 15H to the payer. Payer has received the copy of the form 15G and form 15H. One copy of form 15G, form 15H, payer has to submit to CIT office or CCIT office by 7th day of next month. Say for example, Sarvana has submitted form number 15H to the bank, and Sarvana is asking bank to stop deducting TDS. This form number 15H was submitted in the month of September. Then the payer bank should submit one copy of this form number 15H to the office of CIT or CCIT by 7th of next month, that is 7th of October. They have received form 15G, form 15H copy in the month of September. So payer should submit one copy of that declaration to the office of CCIT or CIT by 7th of next month, that is 7th of October. (197) is subsection 1D. No TDS to be deducted by offshore banking unit while paying interest. This is not an important section for you. Offshore banking unit will not deduct any TDS. Section 197A, subsection 1E. No TDS if the payee is a new pension system, pension scheme trust. See, if you recollect the chapter of deduction, section 80 CCD, new pension scheme, you are investing money in pension scheme. In turn, that pension scheme trust will invest money in different avenues, na? So that pension scheme trust may invest money in debentures, bonds, etc. So those people who are paying interest to this new pension scheme trust, they should not deduct any TDS. They should not deduct any TDS. These two sections are not important. Section 197A, subsection 1F. No TDS or TDS is lower rate at lower rate from certain specified payment to notified persons. See, government has not notified anything. This is just introduced as a precautionary provision. Basically, by inserting this section in budget 2020, government has now got the right that they can issue the notification at any point of time, and that notification will mention the name of specified persons. While making payment to those specified persons, you should either not deduct TDS or you should deduct TDS at lower rate. So this section is introduced just to give the right to the central government to issue the notification. So this section 197A is over. Now listen to me very carefully. I have already explained you section 198 and 199. I will just help you to recollect that. Just few minutes back, I explained to you that there are 4 duties of payer. In this chapter, payer has 4 duties. Number 1, deduct tax. Number 2, pay tax. Number 3, file the TDS return. And number 4, issue the TDS certificate. Similarly, payee has 2 duties. Even though he has received the net amount, what he should consider in his gross amount is, what he should consider in his income is gross amount. And from his tax liability, he should claim the credit for TDS deduction. So, even though he has received the net amount, he should consider the gross amount is in his income. Where this is written, that is written in section 198. That is written in section 198. See, just few minutes back, we also saw section 195A. What is the difference between section 195A and 198? 195A is applicable only when payer has agreed to pay tax to the government. Payer is not deducting TDS and payer has agreed to pay tax from his own pocket to the government. In that case, this reverse calculation is required to be done. In that case, this reverse calculation is required to be done. And in section 198, section 198 is from the point of view of payee. Payee has received some amount. Whatever amount you receive the payee is a net amount. But what he should consider in his income is the gross amount. So whatever tax is deducted, that is income deemed to be received. Say for example, Inside Commerce Studies has made a payment of 45,000 to me after deducting 10% TDS. So actually I have received only 45, but that tax which is deducted by them, that is also deemed to be received by me. So that 5,000 is deemed to be received by me. I should take into account 50,000 while computing my income. To this, there is an exception. What is the exception? Tax on non-monetary perquisite paid by employer and tax deducted under section 194N. See, 194N is nothing but TDS on cash withdrawal, and non-monetary perquisite tax is paid by employer only. So here, while calculating income of pay, you should not do any grossing up. You should not add that amount of TDS to the income of pay. Is that very, very clear? Yes or no? Let us proceed to next section, section 199, credit for TDS. See, whatever TDS is deducted by inside Commerce Studies, while calculating my income, I would be considering 50,000 in my income. I have received 45,000 after deducting TDS at 10%. While computing my income, I would take into account how much? 50,000. Even though I have received 45,000, I would consider 50,000 while computing my income. That is because of section 198. Now I will calculate my tax liability. From that tax liability, I will deduct the amount of TDS which is deducted by inside Commerce Studies and paid to the government. That is called as I am claiming TDS credit. I am claiming TDS credit. Claiming TDS credit means from the tax liability, I should deduct the amount of TDS, which is already deducted by different payers while paying money, while paying income to me. So this point says that credit of TDS will be available to the pay. Credit of tax on non-monetary perquisite paid by employer will also be available to the pay. Credit of tax deducted will be available to pay on the basis of information furnished by the payer to the income tax authority. So payer has to file the TDS return. Payer has to file the TDS return. In that TDS return, payer will clearly mention that this is the amount of tax which I have deducted. Based on that only, credit of TDS will be given to the pay. Now this point is connected to the clubbing chapter. This point is connected to the chapter of clubbing. So you know that income of minor child is taxable in the hands of parent. Which parent? Either father or mother, whosoever's income is higher. So income of minor child is taxable either in the hands of either father or mother, whosoever's income is higher. Say for example, minor child has received some income. Minor child has received some income. If TDS is deducted in the name of minor, what will happen? Income is taxable in the hands of parent, but TDS is deducted in the hands of minor. TDS is deducted mentioning the PAN number of minor. In that case, income is taxable in the hands of parent. Parent's income will increase. Parent's tax liability will increase, and parent will have to pay the tax. Whereas TDS is deducted in the name of minor. TDS is deducted in the name of minor. And income is not taxable in the hands of minor. TDS is deducted in the name of minor, but income is not taxable in the hands of minor. Therefore, minor's income will not be there. Minor's income might be zero. And whatever TDS is deducted against his name, he will have to claim the refund. So in the same family, the parent has to pay tax and minor is going to get the refund. Therefore, government says, if because of applying the clubbing provision, if the income of minor child is being taxed in the income of tax in the hands of parent, in that case, they can give an application to the payer saying that while you report this TDS to the government, don't report against the name of minor child, report against the name of parent only. So while filing the TDS return, the payer, while filing the TDS return against the TDS deducted, he will mention the name of the parent and not the name of minor. So who will be in a position to claim the TDS credit? Parent will be in a position to claim the TDS credit. And since he is in a position to claim the TDS credit, his tax liability payable finally will be less, and minor is not going to get any refund. So basically, TDS will get adjusted against the tax liability of the parent. Further application is required to be given to the payer, and payer should report this TDS against the name of parent only. Have you understood this? With section 198 and 199, our two duties of pay are over. What are the two duties of pay? Even though he has received the net amount, he should consider the gross amount in his total income. And from the total tax liability, he should claim the TDS credit. He should claim the TDS credit. These two sections were from the point of view of pay, and these two sections are over. Now, once again, we are moving on to discuss the provisions from the point of view of payer. We are moving on to discuss the provisions from the point of view of payer. If you recollect, few minutes back, I told you that there are 4 duties of payer. Number 1, deduct tax. Number 2, pay tax. Number 3, file the TDS return. And number 4, issue the TDS certificate. So we have completed the first duty, deduct tax. For that, we have a lot of sections, right from section 192 up to section 195. Now we are moving on to second duty of the payer, that is pay tax to the government. Pay tax to the government. By which date payer is required to pay this TDS amount to the government? That is what we will understand in this table. These due dates are given in section 200, read with rule 30. There are different situations, and there is a time limit for depositing this TDS amount to the credit of government. Situation 1, when the payer is government, or when the payment is made on behalf of government. Means payer is government means government will deduct TDS and pay to the government. Answer is yes. For example, there is a Ministry of Education. See, whose job is to collect tax, etc. Yes, it is whose job to collect the tax? It is the job of Finance Ministry. Finance Ministry is looking after the taxes. Education Ministry will look after the education. How they will get funds? In the budget, Finance Ministry will allocate funds to the Education Ministry. For the education, they will allocate some funds, and those funds over a period of year will be transferred to Ministry of Education. Now, Ministry of Education has received money from Ministry of Finance as part of budget allocation. Now, Ministry of Education is spending money for different purposes. Say, for example, Ministry of Education is spending money for setting up a school. So, Ministry of Education has given the contract to some company for making furniture, for making benches. On that contract, they are making payment to the contractor. They will deduct TDS in which section? They will deduct TDS in section 194C. Besides, there are a lot of employees who are working in Ministry of Education. There are a lot of employees who are working in Ministry of Education. To those employees, government might be paying salary. Government means Ministry of Education will pay salary to them. While paying salary to them, TDS will be deducted in section 192B. Sorry, section 192. TDS will be deducted in section 192. This TDS is deducted by Ministry of Education. This TDS Ministry of Education has to pay to the Ministry of Finance. There are two different approaches to make this payment to the Ministry of Finance. Who has to pay money to whom? Ministry of Education has to pay this TDS amount to the Ministry of Finance. Now, Ministry of Education as well as Ministry of Finance, both are part of the government only. Both are one and the same. So in that case, we are saying that we are giving two options to Ministry of Education to pay this TDS amount to Ministry of Finance. Number one, they can make payment without income tax challan. That is, they can make payment by just passing a book entry. For example, if you recollect, I told you something called as payment by book entry while explaining you section 40 capital A subsection 3. Do you remember section 40 capital A subsection 3? In that I had explained you rule 6DD. Rule 6DD is an exceptional situation wherein you can make payment exceeding 10,000 by any mode other than account, paycheck, etc. In that one point was book entry. Book entry means creditors account debit to debtors account. This entry is passed. Creditors account debit to debtors account, such entry is passed. That is called as book entry. Similarly here, Ministry of Education, for example, Ministry of Finance has allocated 40,000 crores to Ministry of Education as a yearly budget. So over a period of 1 year, Ministry of Finance will pay 40,000 crores to Ministry of Education. And while spending that amount, Ministry of Education has deducted a TDS of say 1,000 crores. This 1,000 crores TDS, Ministry of Education has to pay to Ministry of Finance. So what they will do? Will they pay each other? Answer is no. Government says for them they can make the payment by book entry. Ministry of Education has to receive 40,000 crores over a period of 1 year from the Ministry of Finance, and Ministry of Education has to pay the TDS amount of 1,000 crores to Ministry of Ministry of Education has to pay TDS of 1,000 crores to say Ministry of Education. So what they will do now? They'll pass an entry similar to creditors account debit to debtors account. Na? Internally one entry will be passed. Internally one entry will be passed. Ministry of Education has to receive 40,000 crores. So Ministry of Education will say, whatever TDS you have deducted, na 1,000 crores, we are adjusting against this. So now Ministry of Education is going to receive only 39,000 crores. Are you understanding? Yes or no? So in this case, what is happening? Actually, payment is not made. Actually, money is not flowing from the bank account of Ministry of Education to the Ministry of Finance. The Ministry of Finance, Ministry of Education, everyone will have a separate bank account. So, money, TDS amount is not flowing from the bank account of Ministry of Education to the bank account of Ministry of Finance. Just a book entry is passed. Just a book entry is passed, wherein this 1,000 crores has got adjusted against the 40,000 crores which was allocated as part of budget to the Ministry of Education. So now Ministry of Finance will pay only 39,000 crores to Ministry of Education over a period of 1 year. Have you understood this very clearly? Yes, okay. Let us proceed. So when the payment is done without challan, that is payment is done by book entry, then payment should be done on the same day. Same day means the day on which TDS is deducted. The day on which TDS is deducted, on the same day, this amount should be paid to the Ministry of Education. Because how the payment is made? Payment is just passing a journal entry, book entry. In other words, you should pass the adjustment entry similar to credit of the account debit to debit of the account. Such kind of book entry, adjustment entry should be passed on the same day on which TDS is deducted. Second possibility is when the tax is paid by challan. Tax is paid by challan means Ministry of Education has deducted TDS of say 1,000 crores. So they will make a check of 1,000 crores. Minister of Education will put his signature on that 1,000 crores check, and that check will be deposited in the bank account of Ministry of Finance. While depositing that check in the bank account of Ministry of Finance, one income tax challan form will be required to be filled up. So Ministry of Education is making payment of TDS of 1,000 crores to Ministry of Finance by filling up the challan and by filling up the check. So whenever this payment of TDS is done through bank account, it is done by using a challan. Then what is the due date for making the payment? Due date is 7 days from the end of the month in which tax is deducted. The month in which tax is deducted, from the end of that month, 7th day of next month, that is 7th of next month, that TDS amount should be paid to the government. So whatever TDS Ministry of Education is deducted in the month of April, that should be paid to the Ministry of Finance by 7th of May. Whatever TDS Ministry of Education is deducted in the month of May, that should be paid to the credit of Ministry of Finance by 7th of June. So this TDS amount is required to be paid to the Ministry of Finance by 7th day of next month. Have you understood this very clearly? Yes or no? So this 7th day of next month date is applicable in which case? When the TDS is accompanied by challan. If it is without challan, just by passing book entry, then it is same day on which TDS is deducted. So this point 1 we have understood. This point 1 is applicable when the payer is government itself. Payer is one department of the government. We took an example of Ministry of Education. When the payer is other than government, for example, payer is inside commerce studies. Inside commerce studies, they have deducted my TDS. And this TDS amount they have to pay to the government. But is there any due date for making the payment of this TDS amount to the government? Answer is yes, there is a due date. Yes, there is a due date. What is that due date? If the TDS is deducted in the month of March, then that TDS amount should be paid to the government by 30th of April. If TDS is deducted for any other month, starting from April up to February, if the TDS is deducted for any month, starting from April up to February, then this TDS amount is required to be paid to the government by 7th day of next month. Your book entry facility will not be available. Means, say for example, inside commerce studies has to get some refund from the income tax department. Inside commerce studies has to get some refund from the income tax department from last year's tax habit. Then inside commerce studies cannot say to the income tax department saying that we have to pay the TDS amount to you and we have to get the refund from you. So let us adjust this. Let us pass book entry. That book entry mechanism is not available in case of payer other than government. It is available only when the payer is government. Have you understood this point? When the payer is other than government, then book entry mechanism this is not available. They have to actually make the payment by making a challan, by making a check. So inside commerce studies, whatever TDS they have deducted in the month of April, they have to pay by 7th of May. Whatever TDS they have deducted in the month of May, they have to pay to the government by 7th of June. Whatever TDS they have deducted for the month of June, they have to make payment to the government by 7th of July. So on and so forth. TDS deducted in the month of December should be paid to the government by 7th of January. TDS deducted in the month of January should be paid to the government by 7th of February. TDS deducted in the month of February should be paid to the government by 7th of March. And whatever TDS is deducted in the month of March should be paid to the government by 30th of April. 30th of April. Have you understood this? Yes or no? Okay. So now listen to me very carefully. I am giving you one very important point. See, TDS is required to be deducted transaction wise. TDS is required to be deducted transaction wise. But this TDS is required to be paid to the government on a monthly basis. During a particular month, you might have entered into 50 different transactions. In all those 50 transactions, you might have deducted TDS. But all this TDS amount is required to be paid on a monthly basis to the government by 7th of next month. If it is deducted in the month of March, then by 30th of April. But in certain cases where the SSC is too small, the number of transactions are too less. In that case, SSC payer can give an application to the income tax department saying that please allow me to pay the TDS amount on a quarterly basis instead of monthly basis. Instead of quarterly basis, please allow me to pay the TDS amount to the government on which basis? Monthly basis. Such an application can be submitted by the payer SSC to the income tax department. In that case, assessing officer, income tax officer will take the prior approval of joint commissioner. Will take the prior approval of joint commissioner. If joint commissioner is satisfied, then he may allow a particular SSC, particular payer to pay the TDS amount to the government on a quarterly basis instead of monthly basis. So here it is written where the assessing officer has permitted with the prior approval of joint commissioner to make the payment of TDS on a quarterly basis. When such payment is covered by 192, 194A, 194D and 194H. So when assessing officer, income tax department itself has allowed the payer SSC to pay the TDS on a quarterly basis, in that case, TDS amount should be paid to the government once in 3 months. Quarter means 3 months. So once in 3 months, the TDS amount will be paid to the government. For the first quarter, which is nothing but April, May and June, whatever TDS is deducted in the month of April, May and June should be paid to the government by 7th of July. Whatever TDS is deducted during second quarter, July, August, September should be paid to the government by 7th October. Whatever is deducted during October, November, December should be paid to the government by 7th of January. And whatever is deducted in the month of Jan, Feb, March should be paid to the government by 30th of April. Is that very clear? Yes or no? Okay. Now listen to me carefully. Last part we are on. Section 194 IA. Do you recollect what is section 194 IA? Yes. TDS on consideration for sale of immovable property. What is 194 IB? TDS on rent. When the payer is not covered by section 194 I, TDS on rent, section 194 IB. What is 194 M? When the payer is not covered by section 194 C, 194 J. Yes. In that case, he will deduct TDS in section 194 M if the payment is more than 50 lakhs. See, such transaction would be very less. Such transactions will be generally very less. specifically pertaining to 194 IA. While discussing section 194 IA, if you recollect, in some section it was written that section 203A does not apply. What do you mean by section 203A does not apply? Means payer is not expected to take the PAN number, not PAN number. 203A is not applicable means payer deductor is not expected to take the TAN number, not PAN number. TAN number is nothing but tax deduction and collection account number. Whenever TDS is deducted in section 194IA, IB and 194M, 194I is consideration for transfer of immovable property. 194IB is TDS on rent paid by individual HCF not covered by 194I. 194M is payment made by individual HCF for contract work, fees for professional services, commission, brokerage. In case of these three sections, the TDS amount should be paid within 30 days from the end of the month of deduction. The month in which TDS is deducted, from the end of that month, within 30 days, that TDS should be paid to the government. So here government, instead of allowing 7 days, has allowed how many days? 30 days. So relaxed time limit is given to them. Along with payment of this tax, this payer is required to submit challan cum statement. They are not expected to file the TDS return separately. Income tax challan, which is used for making the payment of TDS, and this statement is nothing but an income tax return. So these people who have deducted TDS in 194IA, 194IB and 194M, along while they are making payment of that TDS to the government, they should fill up form number 26QB and form number 26QC. And this payment is required to be made to the government within 30 days from the end of the month in which the TDS is deducted. And this form is required to be filled up form 26QB and 26QC. And this is required to be done within what time? 30 days from the end of the month of deduction. In other cases, it was 7th of next month. So this is 30th of next month. Is that very clear? Yes. Now we'll move on to section 201. Section 201. Entire section is not important. Only part of the section is important. I'll tell you what is important, what is not. Point number 1 is important. Point number 1 is important. 2, 3 is not important. 4, 5, 6 is important. So point number 1, point number 4, 5, 6. These points are important in section 201. So first of all, I'll explain you point number 1. Then I'll move on to point number 4, 5, 6. Thereafter, we may come to point number 2 and 3. See, section 201, section 201 explains the consequence of failure to deduct or pay tax. What is the first duty of payer? First duty of payer is to deduct tax. Second duty of the payer is to pay tax to the government. There is a time limit for making payment also. TDS should be deducted when? That is explained in different sections. And when this TDS amount should be paid to the government? That is explained in section 200. If there is a failure on the part of the payer, either to deduct tax or to pay tax, then payer will be considered as assessee in default. Payer will be considered to be assessee in default. If payer is considered as assessee in default, penalty will be levied on the payer. Penalty will be levied on the payer. I repeat, payer has to deduct tax and pay tax to the government. If there is a failure on the part of the payer either to deduct tax or to pay tax, then in that case payer will be considered as assessee in default. Payer will be considered as assessee in default. If payer is considered as assessee in default, then penalties will be levied on the payer. How the payer will be considered as assessee in default? By passing an order. So income tax department will pass an order saying that we are considering you as assessee in default. There is a time limit for passing this order also. So point number 2 is explaining you time limit for deeming a person. Person here means payer to be assessed in default for failure to deduct or pay tax. So order is required to be passed for deeming the payer as assessee in default. This order should be passed before the expiry of following time. First point is 7 years from the end of the financial year in which payment was made or credit entry was passed. 7 years from the end of the financial year in which payer has made the payment to payee, or 7 years from the end of the financial year in which payee's account is credited in the books of payer. In TDS, we learned now when to deduct TDS at the time of payment or at the time of credit, which was earlier. So here, if payer has defaulted in deducting TDS, payer has either not deducted TDS or he has deducted TDS but has not paid TDS to the government, then the income tax department will consider payer to be assessed in default. For considering payer to be assessed in default, they will have to pass an order. That order is required to be passed within the specified time. What is that time? 7 years from the end of the financial year in which credit or payment entry is passed in the books of account of payer, or 2 years from the end of the financial year in which correction statement is delivered. Correction statement means payer has to file the TDS return. If there is some mistake in that TDS return, then payer can file the new TDS return, new TDS return after rectifying the mistake. That new TDS return is called as correction statement. So 2 years from the end of the financial year in which that correction statement is filed. So you have to calculate 2 time periods. Number 1 is 7 years from the end of the financial year in which the payment or credit entry is passed, and number 2, 2 years from the end of the financial year in which correction statement is delivered. And then you have to select whichever is later. Then you have to select whichever is later date. By that date, income tax department should pass an order considering the payer to be assessed in default. If he has defaulted in deducting TDS or paying TDS to the government, then department has to pass an order considering the payer to be assessed in default. That order is required to be passed within this period. Have you understood this? Yes. I am not going to point number 4. I am going in the particular order only. So I have explained you point number 1 and 2. Now let's move on to point 3. Point 3 says there is no specification of time where the tax has been deducted but not paid. This time limit to consider payer as assessee in default now. This time limit is applicable only when the tax is not deducted. Means tax is neither deducted nor paid to the government. But if the tax is deducted but tax is not paid, in that case also payer will be considered as assessee in default only. Department has to pass an order to consider payer as assessee in default. But for passing that order, time limit is not applicable. This time limit is not applicable in that case. This time limit is applicable when the payer has deducted tax but has not paid to the government. Sorry, payer has not deducted tax and nor paid the tax. So, payer has neither deducted tax nor paid the tax to the government. In that case, this will be the time limit to pass the order for considering payer to be assessed in default. But if payer has deducted tax but has not paid the tax to the government, then this time limit is not applicable. Have you understood this? Yes or no? I am repeating once again for you. If payer does not deduct tax and does not pay tax, he will be considered as assessed in default. Second possibility, payer has deducted tax, but he has not paid tax to the government. In that case, also he will be considered as assessed in default. So, if payer has not deducted tax and not paid tax, or he has deducted tax but not paid tax, in both cases he will be considered as assessed in default. For considering payer to be assessed in default, an order is required to be passed by the income tax department, and there is a time limit to pass that order. But this time limit is applicable only when the payer has neither deducted tax nor paid the tax. If the payer has deducted the tax but has not paid, in that case, this time limit for passing an order will not apply. And no other time limit is mentioned in the section. So, non-specification of time limit where tax has been deducted but not paid. Section 201, subsection 1 deems a person to be assessed in default if he does not deduct tax or does not pay tax, or after so deducting fails to pay. After so deducting fails to pay the whole or part of the tax as required under this act. In that case, section 201, subsection 1 contemplates three types of default. So there are three types of default. Number one, these are three defaults. Number one, tax is not deducted. Number two, tax is not paid. And number three, after deducting tax, entire amount is not paid or part amount is not paid. The default contemplated in 2 is covered by default contemplated in 3. This point number 2 is automatically covered by point number 3. Point number 2, you do not pay the TDS, or point number 3, after deducting you do not pay. So point number 2 is automatically covered by point number 3. However, the time limit has been specified only for passing order relating to default mentioned in point 1 above. The time limit which I have explained you is applicable only when SSC does not deduct tax. There is no time limit specified in respect of other defaults. Other default means default number 2 and default number 3. Therefore, no time limit has been prescribed where deductor has deducted but not deposited the tax with the government, or the employer has failed to pay the tax wholly or partly on the non-monetary perquisites, or deductee is a non-resident and it may not be administratively possible to recover the tax from such non-resident. So basically, very simple language, we can say that default are of three types. SSE does not deduct the tax, SSE does not pay tax, or SSE after deducting does not pay tax. This time limit for passing an order is applicable when only in first default. It is not applicable in case of second and third default. That's all. You remember this much. This is more than sufficient. In fact, this I have taken in the notes only from this year. Last year, up to last year, I was not teaching this point number 2 and 3. Now let's move on to point number 4. See, in point number 2 and 3, we understood that if payer has not deducted TDS or payer has not paid the TDS, or payer has deducted TDS but not paid the TDS. In that case, he will be considered as assessee in default. And if he is considered as assessee in default, then penalty will be levied on him. Then penalty will be levied. Correct. But government says in section 201 subsection 1 proviso, government says if 4 conditions are fulfilled, then we will not consider payer to be assessee in default. These 4 conditions are already explained to you in the chapter of PGBP also, while explaining you section 40 clause A subclause 1, 40 clause A subclause 1A. Do you remember the relief point? Relief? Yes, relief point. Let me take you to that section. See this. Section 48 clause 1 subclause 1 subclause 1A. If payer has not deducted tax and payer has not paid the tax to the government, in that case what payer can do? Payer can call the payee and ask the payee to do 3 things. Number 1, whatever amount is paid to the payee without deducting TDS, payee should consider the entire amount while computing his total income. Number 2, payee should pay the tax on his total income. And number 3, payee should file the income tax return within the due date mentioned in section 130 subsection 1. If these 3 jobs are done by the payee, and to this effect, a certificate is taken from a chartered accountant and payer is submitting the copy of that certificate to the income tax department, then in that case, what will happen? In that case, we are saying that payer will not be considered as assessee in default. Payer will not be considered as assessee in default, and payer will be believed to be payer will be believed to have been paid a tax on which date? When the income tax return is filed by the payee. The year in which payee is filing the income tax return, in that year payer has deducted tax. That is what will be deemed. In other words, in that year expense will be allowed as deduction. In that year expense will be allowed as deduction. Same thing is mentioned in section 201 also. 201 subsection 1 proviso. What it says? If following 4 conditions are fulfilled, then payer will not be considered as assessee in default. Which are the conditions? Payee has furnished the return of income as per section 130 and subsection 1. Whatever amount payee has received without TDS, that amount payee has taken into account while computing his income in the income tax return. And payee has paid the tax on his total income, which is declared in the income tax return. And 4th point, payer furnishes the certificate to the department. He has to take certificate from a chartered accountant in form number 26A, and he has to submit the copy of certificate to the department. That certificate will be received from a chartered accountant, which will clearly mention that payee has done 3 jobs. Payee has taken that income which was received without TDS into his total income. Payee has paid the tax, and payee has filed the TDS return within the due date. Sorry, payee has filed the income tax return within the due date. CA will give the certificate that yes, these 3 jobs are done by the payee. This certificate CA will give to the payer, and payer has to submit the copy of certificate to the department. In that case, department will not consider payer as assessee in default. What is the advantage of payer not being considered as assessee in default? Penalty cannot be levied. So payer will escape the penalty. If payer is not considered as assessee in default, he will escape the penalty. Have you understood this? Yes. It is point number 6. I will not re-explain you. Point number 6 I have already explained in the chapter of PGEP only. Do you remember? Disallowance will, if the TDS is not deducted, then expenditure will be disallowed to the payer. Where we have discussed it? 40A subclause 1, subclause 1A, subclause 3. No disallowance if the payer is not considered as assessee in default. When payer will not be considered as assessee in default? If the payee has taken that payee has taken that income into account, whatever income payee had received without deducting TDS, that amount payee has taken in his total income. He has filed the TDS return within the due date, and he has paid the tax on his total income. If these three jobs are done by the payee, then payer will not be considered as assessee in default. If payer is not considered as assessee in default, then disallowance will not apply. Basically, disallowance will apply, but expenditure will be allowed as reduction in the year in which payee has filed his return. Disallowance under section 40A subclause 1A will be 30% of the expense. So all these points, these points I've already explained you. Point number 6 is already over. Now we are left with only point number 5. And point number 5 is the most important part. On this, we have a practical question also. We have two questions in our notes, question number 9 and question number 11. Those questions are on section 201, subsection 1A. Those questions are section 201, subsection 1A. See, if the payer fails to deduct the tax, or payer deducts the tax, but he fails to pay the tax to the government, in that case, payer has to face 4 consequences. Payer has to face 4 consequences. Number one consequence is expenditure deduction will be disallowed for the expenditure. I am explaining you that if the payer has failed to deduct TDS, or he has deducted TDS but has not paid the TDS amount to the government, in that case, payer has to face 4 consequences. Consequence number 1, deduction for expenditure will be disallowed to the payer. Consequence number 2, payer will be considered as assessee in default, as a consequence of which penalty will be levied on the payer. The amount of penalty will be decided by the income tax department, but the amount of penalty should not exceed the amount of TDS. Penalty will be decided by the income tax officer, but the amount of penalty should not exceed the amount of TDS. This is the second consequence. Payer will be considered as assessee in default and penalty will be levied. Third consequence, payer will have to pay interest to the government. For late deduction of tax, he has to pay interest at the rate of 1% per month or part of the month. And for late payment of tax to the government, he has to pay interest at the rate of 1.5% per month or part of the month. So there is an interest for late deduction also. There is an interest for late payment also. So payer has to broadly face 4 consequences if he has not deducted tax, or he has deducted tax but has not paid the tax. Number 1, expenditure will be disallowed. Number 2, he will be considered as assessee in default, and penalty will be levied. Amount of penalty will be decided by the income tax department, and the amount of penalty cannot exceed the amount of tax which is not deducted, amount of TDS. Now we need to discuss 2 points out of 4 points. I have already told you 2 points. First and second, expenditure will be disallowed and payer will be considered as assessee in default. Now third and fourth point. Third point, fourth point. Payer has to pay interest to the government for late deduction of tax. And payer also has to pay, fourth point, payer has to pay interest to the government for late payment of tax. So for late deduction of tax as well as for late payment of tax, interest will be levied. Interest will be levied. For late deduction for late deduction of tax. How much interest will be levied? Interest will be levied at the rate of 1% per month or part of the month. Simple interest will be levied at the rate of 1% per month or part of the month. Simple interest will be levied at the rate of 1% per month or part of the month from the date on which tax is deductible till the date on which tax is actually deducted. For example, let me give you an example to make you understand this. Say for example, inside commerce studies is paying me 50,000 on 15th May. So when they should deduct TDS? They are paying me professional fees more than 30,000. They should deduct TDS at the rate of 10% in section 194J. Instead of deducting TDS, they have forgot to deduct TDS in the month of May. Now, for example, in the month of June also they are paying me 50,000. Inside commerce studies, they are paying me 50,000 in the month of May. In the month of May, they have not deducted TDS. They have forgot to deduct the TDS. Now, once again, in the month of June also, they are paying me 50,000. In the month of June, they have deducted TDS on the amount of May also, June also. May, they did not deduct TDS at 10%. That was 5,000. June, they are paying 50,000. On that also 5,000 TDS is deductible. So inside commerce studies, while making payment of 50,000 to me in the month of June, they have deducted TDS of 10,000 rupees. 5,000 for the month of June and 5,000 for the month of May. Have you understood this? Yes or no? So inside commerce studies has paid me, say, let me change the amount. If you are getting confused, let me change the amount. Inside commerce studies has paid me 50,000 rupees in the month of May without deducting TDS. Now inside commerce studies is paying me, say, 40,000 rupees in the month of June. So in the month of June, while paying me 40,000, they should deduct TDS at what? TDS what amount? 4,000. They should deduct TDS 4,000. Instead of 4,000, they will deduct 9,000. Now 5,000 they did not deduct in the last month, na? That amount plus 4,000 of the current month, so they will deduct 9,000. So for the first payment of 50,000, TDS was deductible how much? 5,000. That was required to be deducted on which date? On 15th of May. On 15th of May, it was required to be deducted. But it was deducted in the month of June. On which date it was deducted? Say, for example, it was deducted on 20th of June. It was deducted on 20th of June. In that case, this TDS is deducted late now. Actually, as per section 194J, TDS should be deducted at the time of payment or at the time of crediting pays account, whichever is earlier. So they are making me payment on 15th of May. They forgot to deduct TDS on 15th May. And they have adjusted this TDS in the next month on 20th of June. So they were liable to deduct TDS on 15th May, but they have actually deducted TDS only on 20th of June. So they have to pay interest at the rate of 1% per month or part of the month. From which date? From the date on which TDS was deductible. In our example, TDS was deductible on which date? 15th of May. But it was actually deducted on which date? 20th of June. So if they would have deducted TDS on 15th May, there would not have been any default. Default will be taken from next date. 15th will not be considered as default. Default will start from 16th of May. From 16th of May till 20th of June. From 16th May to 20th of June. Can you tell me it is how much period? It is 1 month and few days. Yes or no? 1 month and 4 days. This 1 month and 4 days will be considered as 2 months. And interest will be levied at the rate of 1% for 1 month. So 2% for 2 months. So on the amount of TDS, what was the amount of TDS? 5,000. On that 5,000, inside commerce studies has to pay 2% to the government. Have you understood the calculation? Yes or no? We are going to solve the practical question on this, but you have to solve that question. I will not solve it for you. I am explaining you right now by taking the example. If you have not understood, please do ask. And if you have understood, please respond. Yes, have you understood the calculation? Yes or no? Yes, okay. So we have understood the first point. Interest for late deduction of tax. Interest for late deduction of tax. Now let me take one example for late payment of tax. First of all, interest for late payment of tax will be levied at what rate? Simple interest will be levied at the rate of 1.5% per month or part of the month. If you pay tax late to the government, government will levy interest at the rate of 1.5% per month or part of the month. From which date? From the date on which tax was deducted. From the date on which tax was deducted till the date on which tax is actually deposited or paid. In simple language, we can say that the number of days for which you have used the money of the government. See, the moment you deduct tax now, the moment you deduct tax, that amount does not belong to you. It belongs to the government. So if you don't pay money to the government, if you don't pay the TDS amount to the government will levy interest right from the day on which you have deducted the tax. Right from the day on which you have deducted the tax. Let me give you an example. Say for example, see I am giving you example. If you want to write, you can write the example in the notebook for a better understanding. For example, Inside Commerce Studies is paying me 50,000 rupees on 15th of May. So they should have deducted TDS on 15th of May. Question is, have they deducted TDS? Yes, they have deducted TDS on 15th of May. They have deducted TDS on 15th of May. Now this TDS they should pay to the government by which date? 7th of next month, that is 7th of June, correct? But now say for example, they have paid this TDS to the government on 20th of June. They have paid this TDS to the government on 20th of June. Now can you tell me delay will be considered from which date? Have you understood the example? Inside Commerce Studies, they have deducted my TDS on 15th of May. Whatever TDS they deduct in the month of May, they should pay to the government by 7th of June. Instead of 7th of June, they have paid to the government this TDS amount on 20th of June. So default will be considered from which date? Will you consider default from 8th of June or will you consider default from 15th of May? Government says we will consider default from 15th of May because from 15th May you started using the money of the government. So if you don't pay this tax to the government within the due date, then government is not going to charge you interest from 8th of June. No. Government will charge you interest right from 15th May. The day from which that tax amount was lying with you. Have you understood this very clearly? So interest will be levied on what? Interest will be levied on the amount of TDS. From which date to which date? Interest will be levied from 16th of May up to 20th of June. From 16th May up to 20th of June, it is 1 month plus few days. This 1 month plus few days now will be considered as 2 months. For 2 months, you have to pay interest at the rate of 1.5% per month. So for 1 month, you have to pay interest 1.5% on the amount of TDS. So for 2 months, you will be required to pay how much? 3%. For 2 months, you will be required to pay 3% on the amount of TDS. Have you understood this very clearly? Yes. Now let's move on to third point, and this is very important point. What third point is saying now? First of all, I'll explain you. Then we will read this third point. Not third, sorry. Fourth point is more important. Point D. I will explain you point D, and then we will read this point D. Say for example, Sarvana, on 5,000 TDS amount, 2 months interest at 1.5% will be 3%. So 3% of 5,000 will be 150 rupees. Yes. 150 rupees will be the amount of interest for delay in payment of tax. Percentage should be applied on the amount of TDS, because TDS amount was required to be paid to the government now. TDS amount was required to be paid to the government. So percentage is required to be applied on the amount of TDS. Yes? Is that very much clear? Okay, now listen to me very carefully. Say for example, Inside Commerce Studies is paying me 50,000 in the month of February. And while paying me 50,000, they have forgot to deduct the tax. In other words, they have paid entire 50,000 to me without deducting TDS. Now in that particular year, they are not going to make any other payment to me. In the month of February, they have paid 50,000 to me without deducting TDS. Year is going to end on 31st of March. In the month of March, Inside Commerce Studies is not supposed to make any payment to me. So my question to you is, do they have the opportunity to deduct TDS in the current? If you forgot to deduct TDS, then you can deduct extra TDS in next month na, or in future period na. But here they are making me payment in the month of February, and they have forgot to deduct the TDS. In the month of March, they are not going to make any payment to me. On 31st of March, year will end. Definitely, they can deduct TDS from the payment which they are making me in the next year. But in income tax, you have to file the income tax return for 1 year now. While Inside Commerce Studies is filing the income tax return. Question is whether they will claim deduction for the expense or not. Whether they will be considered as assessee in default or not. Whether they will be required to pay the interest to the government or not. So I have explained you one point in section 40A sub clause 1, 40A sub clause 1A. That point is called as relief. Just few minutes back, we went to the chapter of PGP and we saw that relief. Now I am explaining the same thing once again in context of interest. For example, Inside Commerce Studies paid me 50,000 rupees without deducting TDS on 15th of February. They paid me 50,000 rupees without deducting TDS on 15th of February. Now Inside Commerce Studies know that they don't have the opportunity to deduct TDS now, because they are not going to make me any payment up to the end of the year. In that case, they will be considered as assessing default because they have failed to deduct TDS. they will be considered as assessed in default, penalty will be levied. So, for with the intention to escape from the penalty, what inside commerce studies will do now? Tarun sir will call me saying that, sir, we have paid you money without deducting TDS. Now we have to do 3 jobs. Number one, whatever amount we have paid to you, you should consider that amount while computing your total income. You should pay tax on your total income, and you should file your income tax return within the due date, which is applicable to you. You have to do these 3 jobs. Please don't forget. Once again, I'll put a reminder to you. So Tarun sir has also sent me a voice message on my WhatsApp saying that, sir, we have forgot to deduct TDS. You please don't forget to pay the tax. Don't forget to take that amount in your total income. Don't forget to pay the tax. And don't forget to file the TDS, file the income tax return within the due date. If I am doing all these 3 jobs, in that case, what is the benefit to inside commerce studies? They will not be considered as assessed in default. They will not be considered as assessed in default. Penalty will not be levied. Question is whether the deduction for the expenditure will be disallowed to them. Yes, deduction for the expenditure will be disallowed in the current year and to be allowed in the year in which payee has filed the income tax return. Deduction for the expenditure will be disallowed in the current year, and that expenditure will be allowed as deduction in the year in which payee has filed his income tax return. In this case, payer inside commerce studies will not be considered as assessed in default, and penalty will not be levied. Now, next question is, will they be required to pay interest? Definitely yes. At what rate? 1.5% or 1%? See, generally 1% interest is payable from which date to which date? Date on which TDS is deductible. Date on which tax is deductible till the date on which tax is actually deducted. And 1.5% interest is payable from the date on which tax is actually deducted till the date on which tax is actually paid to the government. But in our example, inside commerce studies, they have not deducted TDS now. I know TDS was deductible. When it was deductible? It was deductible on 15th of February. It was deductible on 15th of February, but that TDS was not deducted up to the end of the year. So if you want to calculate this 1% interest, you have the starting date, but you don't have the ending date. 1% interest is calculated on the amount of TDS for which period? Period starting on the date on which TDS was deductible. In our example, TDS was deductible on 15th of February and ending on the date on which TDS is actually deducted. But in our example, TDS is not actually deducted. So if you want to calculate interest, the starting date is available, ending date is not available. Are you understanding what I'm trying to explain you? Yes or no? Yes. Similarly, this 1.5% per month interest, 1.5% per month interest is required to be calculated from the date on which TDS was actually deducted to the date on which TDS is actually paid to the government. Here also, inside commerce studies, they have not deducted TDS only. So starting date itself is not available. And they have also not paid TDS to government. Instead of them, I have paid tax directly to the government. Therefore, to cover this situation, government has inserted proviso to section 201 subsection 1A. What the proviso says, where the payer fails to deduct TDS and payer is not deemed to be assessed in default. When payer will not be deemed to be assessed in default? When payee has taken into account that income which was received without TDS, payee has taken into account that income. Payee has paid the tax on his total income and payee has filed the income tax return within the due date. Those three conditions are fulfilled by the payee and payer has taken the certificate to this effect from the chartered accountant and he has submitted the copy of certificate to the income tax department. In that case, we say that payer will not be deemed to be assessed in default. So those cases wherein payer has neither deducted the tax nor paid the tax, but three conditions are fulfilled by payee, and fourth condition of submitting the copy of certificate to the department is fulfilled by the payer. In that case, 1% interest and 1.5% interest will not be levied separately. Only 1% interest will be levied. Only 1% interest will be levied. So interest will be levied at the rate of 1% per month or part of the month from the date on which tax was deductible. From the date on which tax was deductible, that is 15 February in our example, to the date of furnishing return of income by the payee. So here the interest period is different. Starting date is correct from the date on which the tax is deductible, and ending date is what? The date on which payee has filed the income tax return. Because if any tax is payable by the payee, the tax is required to be paid before filing income tax return. So the day on which the payee is filing the income tax return, whatever outstanding tax might be there, he would have paid. So government says we will levy interest to the payer only at 1% per month or part of the month from the date on which that tax was deductible to the date on which income tax return is filed by the payee. Have you understood this case? Yes or no? So point number A, B and D I have explained to you. Now we are left with point number C and D. Point number C and D says whatever interest is there, 1%, 1.5%, whatever interest you have calculated, this interest payer has to pay to the government. This interest payer has to pay to the government before furnishing the TDS return. Before furnishing the TDS return, this interest is required to be paid to the government. If this interest is not paid to the government, then the tax amount along with the interest amount will be considered as charge upon all the assets of payer. See here, by mistake, instead of O, P is printed here. It is not PF, it is OF. So if this interest is not paid to the government, then the amount of tax plus the amount of interest will be considered as charge upon the assets of payer. Charge upon the assets of payer means government can confiscate those assets and sell those assets to recover the amount of tax and interest. Is that very, very clear? Yes or no? So we have completed section 201, subsection 1A. Based on this, we have two questions, question number 9 and question number 11 in our notes. So we'll have a break, and after the break, we can solve the question. Right now, we'll have a break, and after the break, we'll solve question number 9, question number 11. Yes, is that very clear? Okay, anyone of you having any doubt? Yes, break till 9:30. Okay, break till 9:30. Any one of you having any doubt? This one says yes, point number 2. Point number B, Rizwan, if the TDS is not paid to the government, then interest is levied. Interest will be levied. At what rate interest will be levied? Interest will be levied at the rate of 1.5% per month or part of the month. From which date to which date? From the date on which tax was actually deducted. Point 2. Point 2 means this one. Okay. See, if payer has not deducted tax or payer has deducted tax but he has not paid the tax to the government, in that case, what will happen? Payer will be considered as assessee in default. Payer will be considered as assessee in default. For considering payer as assessee in default, income tax department has to pass an order saying that we are deeming you to be assessee in default. In what time limit that order is required to be passed? That order is required to be passed before the expiry of following period. What is that period? 7 years from the end of the financial year in which payment was made or the credit entry was passed. TDS is required to be deducted in lot of sections at the time of payment or at the time of credit, whichever is earlier, right? So, from the end of the year in which that credit entry was passed or payment was made, from the end of that year within 7 years, or 2 years from the end of the financial year in which the TDS return is filed, or TDS return was filed wrongly, then rectified TDS return is filed. Within 2 years from the end of the financial year in which rectified TDS return is filed. You calculate these two periods. Out of these two, then you select whichever is later. By that date, income tax department has to pass an order considering payer to be assessed in default. This one, have you understood this? So before the break, we have completed section 201. Along with that also we discussed section 201 subsection 1 and subsection 1A. Section 201 subsection 1A talks about calculation of interest. So now we'll move on to a practical question which will show you this calculation of interest. So we move on to question number 9. Question number 9 on page 352. Before that, have we completed all the questions? Question number 1 to 8. Yes. Question number 1 is over. 2 is also over. 3 is over. 4 is over. I think 5 is pending. Question number 5 is pending. Correct? 5 and 7 are pending, so we'll complete question number 5 and 7. Then we'll move on to 9 and 11. So let's move on to question number 5 first. An individual practicing as a chartered engineer. Individual practicing as a chartered engineer. It is not chartered accountant, chartered engineer it is. Means those individuals, those professionals who will do the valuation of properties. So an individual practicing as a chartered engineer is in receipt of fees from a company which has retained him for the purpose of valuation of properties. The total fees agreed upon between the parties was 50,000, and engineer was also to be reimbursed of all the expenses incurred by him to visit the various locations where the property are situated. So the individual is appointed for the purpose of doing the work relating to valuation of properties. The fees is fixed at 50,000 rupees. plus he will be reimbursed all the expenses which he might be incurring for visiting the location where the property is situated. So he has incurred an expenditure of 45,000. This 45,000 will be reimbursed. Engineer was paid the following amounts by the company: 20th April 20, 10th June 20, 5th July 20, 10th July 20. Advance fees is given, then 20,000 is given for reimbursement towards expense incurred, balance of fees for completion of the work, in total settlement of claim for reimbursement expense. Here it says he issued a single bill of 95,000, including a reimbursement of expense of 45,000. So single bill is issued for 95,000. If two separate bills are issued, one for professional fees, the other one for reimbursement expense, then TDS will be deducted only on professional fees, not on reimbursement of expense. If single bill is issued, but there is a breakup with respect to the amount of fees and amount of reimbursement of expense, then also TDS will be deducted only on the amount of fees, not on the reimbursement of expense. But here it says a single bill is issued 95,000, including for reimbursement expense. So on this entire 95,000, TDS will be deducted. Is that very clear? This payment is covered by section 194J. Payer is liable to deduct TDS if he is other than individual HF, he is liable to deduct TDS. If the payer is payer is individual HF, then they are liable to deduct TDS only if their business turnover in the last year was more than 1 crore or the gross receipts were more than 50 lakhs. TDS is required to be deducted at 10%. COVID special rate is 7.5%. TDS needs to be deducted at the time of payment of credit, which was earlier. Minimum amount not liable to TDS is 30,000 rupees. So here the aggregate amount is 95. Here the aggregate amount is 95. So here single bill is issued for 95,000 without giving any breakup with respect to how much is professional fees and how much is reimbursement expense. On the entire amount, TDS will be deducted. Is that very clear? Sarvana, in that bill, if the amount of fees and amount of reimbursement is separately mentioned, then definitely reimbursement expense TDS will not be deducted. TDS will be deducted only on the amount of fees. Is that very clear? Okay. In this case, they are not given whether the reimbursement expense is separately mentioned in the invoice or not. That is the reason we are saying that TDS should be deducted on the entire amount. So question number 5 is over. We move on to question number 7. Question number 7 says Mensa Private Limited credited 18,000 towards fees for professional services and 22,000 towards fees for technical services to the account of Mr. Shiva in the books of account on 6th October 2020. This total sum of 40,000 was paid by check to Mr. Shiva on 18 December 20. Examine the obligation to deduct and pay tax at source and indicate the due date for payment of such tax. Can you tell me what is this 80,000? Fees for professional services. What is this 22,000? Fees for technical services. Yes? Whether the TDS should be deducted or not. Yes, TDS will be deducted or not? Which section TDS will be deducted? 194J. Do you believe that TDS will be deducted? Refer 194J if you want. You can refer 194J and then tell. Consider this to be an open book examination for you. Yes. What is the minimum amount not liable to TDS in case of 194J? Yes, 30,000. So whether the TDS should be deducted or should not be deducted? 30,000 is not the combined limit. 30,000 for each payment separately. 30,000 is the limit for each payment separately. 18,000 professional fees is paid. 22,000 technical services. So each payment is less than 30,000. Professional fees, there is a separate limit of 30. Technical services, there is a separate limit of 30. Yes or no? So TDS is not required to be deducted. TDS is not required to be deducted because the individual payment does not exceed 30,000. See, if you refer section 194J carefully, 30,000 is written against each nature of payment separately. 30,000 for fees for professional services separately, 30,000 for fees for technical services separately, 30,000 for royalty separately, 30,000 for non-compete fees separately, and for payment made to director, nothing is mentioned, so amount is zero. So even if you pay 100 rupees to director, you have to deduct 10% TDS. So for each nature of payment, 30,000 limit is required to be applied separately. Are you understanding? So in this case, TDS is not required to be deducted because the each nature of payment does not exceed 30,000 limit. Now let's move on to question number 9. Compute the interest payable under section 201 if any in the following cases. R Limited paid commission to its agent Shah and Company 1 lakh on 15 December 20. The tax was deducted on 15 December 20. Question number 8 is pending. Question number 8 is pending. Oh, point number 1 and 2 are pending. Okay. So let's first of all do question number 8 only. Point number 1. State Bank of India pays 50,000 per month as rent to the central government for the building in which one of its branches is situated. State Bank of India is paying a rent of 50,000 per month to the central government for the building in which one of the branches of State Bank of India is situated. Should they deduct TDS? No. Why? Because section 196 says when you are making payment to central government, state government, corporation established under Central Act, mutual fund registered specified under section 1023D RBI, you should not deduct TDS. So this question you should answer giving a reference to section 196. Point number 2. A television company pays 50,000 to a cameraman for shooting of documentary film on 20th May 20 and pays 30,000 on 10th June 20 against the same contract dated 1st April 20. Yes, fees paid to cameraman is called as technical services. This is covered by section 194J. In 194J, TDS is required to be deducted at that of 10%. COVID special it is 7.5%. provided the aggregate amount paid payable during the previous year exceeds 30,000. So your first payment itself has exceeded 30,000. So TDS is required to be deducted. And what rate? 7.5%. Why? Because it is during the period 14 May 20 to 31 March 21. COVID special rate will apply 7.5%. Is that very, very clear? Let's move on to question number 9 now. Compute the interest payable under section 201 if any in the following cases. Every case is an independent case. They are not connected to each other. Yes, Deva madam, on entire 80,000 TDS will be deducted. On entire 80,000 TDS will be deducted. Shall I proceed? So let us go to question number 9, point number 1. There are 3 points here. Every point is an independent point. Don't try to connect these points to each other. Point 1 says R Limited paid commission to its agent Shah and Company. How much commission? 1 lakh. This is paid on 15 December 20. Tax was deducted on 15 December 20, but it was deposited by only 4th March 21. Now tell me, there is a late deduction or there is a late payment or there is both? Yes? There is late deduction or late payment or there is both? Only late payment. There is no late deduction. There is no late deduction. There is only late payment. See, on 15th expense was paid, on 15th TDS was deducted. So there is no late payment. Sorry, there is no late deduction. Whatever you deduct in the month of December should be paid by 7th of January. Instead, you are paid on 4th March. So 1.5% per month interest will come. For what period? Yes. For what period? From 15 December to 4th March. Date on which TDS is deducted. So the date on which TDS is actually deposited. Yes or no? So from 15 December there will not be default. You take it from 16. From 16 December to 15 January, 15 February, 15 March. It is 3 months. Deva madam. January, February, March, 3 months na. Not 4 months. You don't have to count the number of months based on the calendar months. You have to count date from date. From 15 December, 1 month will get completed on 14 January. 2 months will get completed on 14 February. Third month will get completed on 14th of March. Yes or no? This is the manner in which you have to calculate the months. So you have to calculate interest for 3 months at 1.5% on the amount of TDS. Have you understood the calculation? You do one thing. I am giving you 5 minutes time. You try to solve question number 9 as well as 11 on your own. I am giving you 5 minutes time. You solve question number 9 as well as question number 11 on your own. Then we'll have a discussion. You try to solve this question on your own. Okay. So R Limited paid commission to one of its agents, Shah and Company, 1 lakh on 15 December 20. Tax was deducted on 15 December 20, but it was deposited only on 4th March 21. As discussed earlier, we need to calculate interest for 3 months at the rate of 1.5% per month. So interest will be 4.5%. This commission is covered by which section? 194H. What is the rate of TDS in 194H? 5%. But COVID special rate will be what? 3.75%. So 3.75% of 1 lakh will be how much? 3750. On that 3750, you have to calculate the interest at 4.5%. That would be how much? 168.75. Yes, 168.75. Have you all understood the calculation? Okay, next. Mr. Vinod, liable for tax audit in the year 1920, paid fees of 90,000 to his chartered accountant on 8 August 20 without TDS. He further paid 20,000 on 11 January 21. At the time of payment of 20,000, he deducted tax on entire 1,10,000 and deposited the same on 2nd February 21. Yes. Can you tell me, is there a late deduction? There is, in case of this first payment, now there is a late deduction. Yes or no? Okay. In case of second payment, is there a late deduction? No, there is no late deduction. In case of second payment, there is no late payment also. But what about the first payment, 90,000? Is there a late payment? First of all, this is covered by which section? Fees paid to a chartered accountant covered by which section? Section 194J. Minimum amount not liable to TDS is 30,000. Rate of TDS is what? 10%. COVID special rate is 7.5%. Now listen to me very carefully. Here payer is Mr. Vinod, pay is his chartered accountant. Date of payment of first payment is 8 August 20. Amount of first payment is 90,000. Second payment date is 11 January 21. Amount of second payment is 20,000. Tax on the entire amount is deducted on 11 January 21. So tax to be deducted at 7.5% of 1,10,000 would work out to 8250. Date of payment is 2nd February 21. Now listen to me carefully. First of all, we will calculate what? Interest for late deduction. From 8 August 20, you take 1 month. It will be 7 September, 8 September, 7 September, 7 October, 7 November, 7 December, 7 January. So it is 5 months and few days. So how many months? Yes. The TDS was required to be deducted on 8th August now. But it was actually deducted on which day? 11th January, yes or no? So you have to calculate period from 8th August to 11th January. From 8th August 20, you calculate 1 month. That will be 7th September. 7th September, 7 October, 7 November, 7 December, 7 January, 7 September, October, November, December, January, February. So it is 5 months and few days, yes or no? 6 months will get completed on 7th February. 5 months will get completed on 7th January. Sarvana, you are required to deduct TDS on 8th August 20, correct? Huh? But you have actually deducted TDS only on 11th January 21. So now you take 1 month from 8th August 20. From 8th August 20, 1 month will be what? Up to which date? Sarvana, 7th September 20. Not 8th September, 7th September. You can take 8th September. Default will start from 9th. So you can take 8th September. So 8th September is 1 month now. 8 October 2 months, 8 November 3 months, 8 December 4 months, 8 January 5 months, and then 3 days. 5 months and 3 days is how many months? Yes, 6 months. So you calculate interest for 6 months at the rate of 1%. Yes or no? Tell me what is the amount of interest. First of all, tell me what is the amount of TDS. On this 90,000 TDS at the rate of 7.5% will be how much? 6750. On that 6750 you apply how much percentage? 6%. 1% for 1 month, 6% for 6 months. Yes or no? So you get the amount of 405. You get the amount of 405. Now you listen to me very carefully. See, the amount, the TDS which was required to be deducted on 8th of August, and this payment was required to be done on which date? 7th of September. Forget about making payment by 7th September. By 7th September, even he has not deducted the TDS. Date of making the payment is also gone. Then also TDS is not yet deducted. In such case, in case of first payment, interest at the rate of 1.5% will also come. So if the actual date of deduction of TDS is after 7th of next month, then you have to calculate interest also. For what? For late payment. For late payment, you have to calculate interest. Are you understanding? Because if you deduct TDS in the month of August, the amount should have been paid to the government by 7th of September. But the government did not get the money on 7th of September. Government has got money after that. So for that you have to pay interest at the rate of 1.5% per month or part of the month. From which date to which date? From the date on which TDS is deductible to the date on which TDS is actually deducted. So from which date to which date? From 11th January to 2nd February. So it is 1 month. So you take only 1.5%. 1.5% on what amount? On 6750. 1.5% of 6750 will be how much? Yes. 101.25. Have you understood the calculation very clearly? Yes or no? Yes. Let us move on to the last part now. Question number 9.3. CCD Limited has paid 1 lakh as interest on loan to Mr. A on 16 January 21, but failed to deduct tax thereon. A filed his return of income on 13 July 21. A has included the said amount of interest of 1 lakh in its total income and has paid the tax. See, first of all, this is interest other than interest on securities. It is covered by section 194A. Rate of TDS is 10%, COVID special rate is 5%. Minimum amount not subject to TDS. If the payee is a resident person, senior citizen 50,000, otherwise 5,000. Do you remember those provisions? If you don't recollect, we can go to page number 310. If you don't recollect the provisions, you can go on to page number 310. See, when the payer is any other person, if the payer is a senior citizen, then the limit is 5,000, otherwise the limit is 50,000. So here Mr. Who is payer? CCD Limited is payer. So payer is neither a bank nor cooperative bank nor post office. Payer is any other person. And who is payee? Mr. A. Now whether Mr. A is senior citizen or non-senior citizen is not given the question. But what amount is paid is 1 lakh. That 1 lakh is more than 50 also, 5 also. So anyway, TDS is required to be deducted. At what rate TDS is required to be deducted? 10%. And COVID special rate is how much? 7.5%. But TDS is not deducted, TDS is also not paid. TDS is not deducted as well as not paid. So what will happen in this case? And the other person has included that amount in his total income. He has paid the tax and he has filed the return within the due date. In that case, 1% and 1.5% interest will not be calculated separately. Yes or no? Only 1% interest will be calculated from the date on which TDS was deductible. That is 16 January. Up to the date on which income tax return is filed by the resident payee. Filed by the payee. That is 13 July. So from 16 January, 1 month will be 15 February. 15 February, March, April, May, June, July. How many months? 6 months. Yes or no? So for 6 months, you have to calculate interest at that 1% per month or part of the month. So that interest amount will be 6%. 6% of what? Of TDS amount. What is the TDS amount? COVID special rate of TDS is 7.5% because the payment is made on 16 January 21. 7.5% of 1 lakh is 7,500. Of that 7,500, you apply what? 6%. That be how much? 450 rupees. Yes or no? So 450 rupees will be the interest in case of point number 3 of question number 9. Now let's move on to the last question, that is question number 11. Question number 11 says compute the interest in section 201 if any in the following case. TBZ and company made the following payments to Mr. Ravi, a contractor. TBZ and company made the following payments to Mr. Ravi, a contractor. 1,50,000 is paid on 3rd September 20. 80,000 is paid on 10th November 20. They deducted TDS at the rate of 0.75%. See, this is covered by section 194C. Payment made to contractor, subcontractor. If the pay is individual, TDS rate is 1%. COVID special rate is 0.75%. Do you recollect that? 194C TDS is required to be deducted if the single payment is more than 30, aggregate payment is more than 1 lakh. TDS is required to be deducted at the time of payment of credit, which was earlier, only in case of works contract. So all these conditions are fulfilled here. So here they are saying they deducted TDS at 0.75% on entire 2,30,000 on 10th November 20 and deposited the money on 15 April 21. So there are two payments here, 1,50,000 and 80. On 1,50,000, there is a late deduction as well as late payment. Whereas on the second payment of 80,000, there is no late deduction, there is only late payment. Yes or no? So can you tell me what will be the interest for late deduction in case of first payment? TDS was required to be deducted on 3rd September, you deducted on 10th November. So from 3rd September, you take 1 month. 2nd October, 2nd November. So it is 2 months and some number of days, that is 3 months. For that 3 months, you take interest at the rate of 3%. 1% for 1 month, 3% for 3 months. On what amount? On the amount of TDS. What is the amount of TDS? 1,50,000 into 0.75 percentage. 1,50,000 into 0.75% will give you how much amount? Yes? Are you understanding? 1,50,000 into 0.75 will give you 1,125. Of that 1,125, you take how much percentage? 3%. Yes. So what is the amount? 33.75. So interest for late deduction in case of first payment is 33.75. 33.75. Now, for late payment, there is a late payment of 150. Late payment in case of first payment also. There is a late payment in case of second payment also. And in case of late payment, you have to pay interest at the rate of 1.5% per month or part of the month. From which date to which date? From the date on which? From the date on which TDS is deducted to the date on which TDS is actually paid. Dixit is asking me, sir, question number 9, point number 3 is covered by proviso. Yes. Yes, Dixit is covered by proviso. That is the reason we have calculated interest only at the rate of 1%. So you have to calculate interest for late payment in question number 11. From which date to which date? From the date on which TDS is deducted. Sarvana, not 7 December, 10 November. I already explained you now. You have to levy interest for number of months for which government's money was lying with the payer. So government's money was lying with the payer right from the date on which tax was deducted. So you should not calculate, for calculating interest, you should not take period from 7 December. You should take from 10 November only. Do you remember I gave the example to make you understand this? So from 10th November 20 to 15th April 21, how many months? 1 month will get completed on 9 December. 9 December, 9 January, 9 February, 9th March, 9th April, and few days. So it is 5 months and few days, that is 6 months. 1.5% for 1 month, for 6 months it will be 9%. 9% is on what? 9%. Calculate the amount. So we'll calculate interest at what rate? 9% is right. On what amount? TDS will be what? 2,30,000 into 0.75%. 2,30,000 into 0.75% is how much? 1,725. 1,725 into 9% will be how much? 1,725 into 9%. Deva madam, for late payment TDS, late payment of TDS interest is 1.5% per month, na? So for 6 months it will be 9%. Correct? Get me the amount of interest. $155.25. Okay. So question number 11 is also over. Here we have calculated separately 101.25 and 54. So that will be 155.25. Is that very clear? Yes or no? Yes. Have you got the answer? Have you understood the calculation? Yes. Okay. Okay. Now, one second. Huh? So we have completed what? How many concepts we have completed till now? 201 is over. Up to page number 335 we have completed. Up to page number 335.